we had narrowing whole real bodies of candles in back here, indicating that we're going to have tentative trading right after that. We had a wide range and the narrow range candles. We did, in fact, have two sell-off days. We have some bullish lower shadows, almost a hammer type pattern, though I believe technically the hammer should be at the bottom of a low. Learn more about candles from my colleague Steve Nissen, of course. He knows a lot more about candles than I do, but I do know enough to be dangerous with having traded millions of dollars worth of stocks, ETFs, minis, and FX using candle and Western technicals. I like the fact that we're at new highs. And notice, please, that resistance is exactly the same back here. I teach traders how to use cups. Anyway, resistance triggers for the week ahead. Let's use R1 as 1705, and then let's use 1718 as R1 and R2 respectively, 1705. You can see that they backed off the 1700. That's why I like using price action in my own trade. So, because again, it's obvious and everyone knows, and I told you guys last week to sell into the 1700 resistance, and I was right. Anyway, 1705, 1718 for R1, R2. For S1, let's use 1665, okay, as support 1. And support 2, let's park it right under the 50 moving average at 1640. So S1 and S2, let's use 1665 and 1640 to start scaling out of or flipping to short if the S&P moves there. Pretty good volatility lately. Now let's flip over to our swing trading stock charts. And for those of you who are new to working with me, we start off with swing trading stock charts, then intraday stocks and gaps, and then a sub $20 stock here or there, our ETFs, then we cover our E-minis, and then our Forex. Then I cover 5 bonus charts for all of my Trading the Open members. So a lot to cover this morning, so let's get on with it. Gilead Pharma, really nice move up here, GILD, the ticker. I like the fact we're doing a 15-day high breakout, and you can see it is a 90-day high as well. So we want to see if that's able to take out new price action highs in the week ahead as well. Next up, HLS. Not only is that a gap up that continued to move up just a bit, but we're from 29 to 33. So HLS, I like this one because we're up at a new price action region. And also, we've had a nice strong move up off the, not only off the 50 moving average, but we have a large inverse head and shoulders, right? Left shoulder, head, right shoulder, bullish cut breakout to the upside. So keep HLS on the watch list for the week ahead as well. Next up, NI, the ticker, NI. And what I like about NI is the fact that we not only do we have that inverse head and shoulders and a bullish cut breakout, but we have nice price action volatility from 28 to 31.5. And if we look at that on the daily, you can see we have a big engulfment type pattern here, which is nice. And we want to see if it's able to pierce new highs and move up. It's been running up the whole last month, so we'll see if it's able to do more of same in the week ahead as well. Good price action and good volume and volatility. And these are the type of charts at least I like to trade, because I don't like cheap instruments because they tend to be much riskier and do unexpected things. I prefer strongest of all instruments that are reasonably priced, somewhere between usually $20 and $70 a share, my favorite for price range. Swing trading pick number 4, SFUN. You can see that not only did we take out the cup pattern highs, but we also have a new high volume breakout here in Friday's price action as this thing skyrocketed up 4 points, piercing new breakout price in SFUN. SFUN looks fun to trade, right? If you'd gotten in on a wide range candle, and remember, I like to teach you guys, get in, right after a wide range candle breakout, and even if you miss, the secondary, you always have additional opportunities at each new successive cup breakout. So anyway, SFUN, a particularly good volatile chart. That one got on my radar, and I'm going to keep that one on the watch list as well. Last of our swing trading stock charts, YNDX, the ticker, YNDX. And not as good as the earlier Gilead and HLS ones, but still a nice healthy uptrend, right, with decent high volume close with an engulfment or engulfing type pattern, 31 to 33. It's not a bullish or bearish engulfing because it's not after a downtrend that bullishly engulfs it, but it did engulf. The price action engulfed the previous, almost engulfed, I should say, previous day's high-low. It did engulf the closing range, and I always like to see those type of moves. So anyway, keep an eye on YNDX if it's able to break over 34. It's a gap up continuation play. Remember, I teach you guys gaps usually continue in trend, and that's exactly what this one's done. So keep that one on the watch list as well. For day trading, the two best charts that I found And I was posting really good calls for these, by the way, yesterday and the day before in the live trading room. Akamai, AKAM, we nailed the breakouts in that one. And both days, I believe it was. I know yesterday for sure. AKAM, I like the fact that it runs 45 to 46 now. That's 1.5 points in a single breakout run. And if you take a look at the advanced chart, good day traders chart, you can see here we've got to move here from the low of the 45.3, I think was my long call. Anyway, ran all the way up here. We have a shooting star right there at 46.50 and a bearish engulfment and a shooting star. So that told us we're going to drop the price. Anyway, tweezer tops there, 2 shooting stars, and then we retrace back into the range as well. So always be on the lookout for shooting stars, hammers, engulfing patterns, and more. For more on learning how to combine candlesticks with Western technicals, you can always get StockTradingSuccess.com with my colleague Steve Nissen and myself. Hundreds and hundreds of traders have found value in that, so that's a good course. Anyway, we see a shooting star up here, and you can see how strongly it moves. So that makes for a good play for day traders for the weekend. The other one, of course, is the gap up volatility we've seen in Facebook. FB, the ticker. Come on, Facebook. The opening range relatively noisy in that one yesterday. That's why I like Tuesday, Wednesday, Thursday is the best. Anyway, here is the range that we saw. Let me pull this back here for you guys. Okay, there we go. On the open, we had pre-market bear cup in Facebook on Thursday, sold down, and then did a nice run up from 33 to 30, just under 34 and 33.9. So really good move up there. Anyway, keep Facebook on the radar for the week ahead, especially good for intraday trading opportunities. That one and Akamai seem to have the biggest strength of the relative runs during the opening range during the first hour of the market open. So those are good. For gap trades, the 2 big story stocks are Expedia and Starbucks, right? Expedia yesterday, and I posted short calls for people in that. That one did good. Expedia, big gap down from 65 to 50. We're in earnings season, so you're going to be seeing a lot of gaps. Remember, go in trend of the gap. When gaps go down, sell them. When gaps go up, like Starbucks, we like to buy them, right? Gaps continue in trend. Gap open at 72, closed up a 1.5 later, 73.50, just under 73.50. Anyway, Starbucks and Expedia, the 2 gap picks of the week for the week ahead. For our sub $20 stocks, the best one out there I can find is this one, GDP, the ticker, GDP. It's in Gulf Delta Papa, GDP. You can see, I like this because it ran from 14 to 18. Last week especially was a pretty strong price action momentum run week from it. You know, it broke out not only above the previous cup pattern, but it had successive new high cup breakout continuation runs. So anyway, keep that one on the radar. You can see bearish upper shadows lead to selling. Anyway, it's right up under the 18, so keep GDP on the watch list for the week ahead. For ETFs, I still like XIV is the strongest of all the exchange-traded funds out there. It continues to take out new highs, and you can see the price action in that as it's moved from just around 22 all the way up to 26.50, so really good run in XIV. Okay, now let's switch gears for our E-mini traders. And for the ES, and again, you can extrapolate equivalent price values for the YM and the NQ or other, you know, index futures. The E-mini triggers for the week ahead. All my E-mini traders out there scrambling to write down these, right? That was write down the notes. It was 1690. R1 is 1691.75. We're going to park it right here, just 3 ticks over this. I want to keep out of a false breakout region, so I'm always looking at setting triggers in a way that's not obvious to the crowd. We don't want to buy way up here at previous highs, right? We want to buy here and sell into that, right? If you can get a couple of handles of price action out of that, that would be good. You want to buy, say, right under previous resistance or right here at above previous resistance, because that frequently leads to a false breakout and it drops back down and chops. And having done that, if you've done that a lot of times over the years as a trader, you know it's frustrating. So I specialize in teaching traders how to avoid false breakouts by carefully integrating candlestick patterns with Western technicals for professional momentum entries. Anyway, the 2 resistance triggers, R1 1691.75, R2 for the next week ahead, we're going to be careful. I'm using 1701. I don't want to buy it right here. 1701 and a quarter. And again, if we get wide range in the 1701 and a quarter, so that's R1, R2 here. You don't want to, as an E-mini trader especially, you're trading against guys who are pros, mechanics in the market like myself, and you don't want to be trading against us by trading obvious support and resistance. That ends badly, right? And if you've been frustrated with your E-mini trades, be sure to visit my eminiuniversity.com site. I'm the original, and I believe the best of all the university sites out there. I've got Day Trading University, Swing Trading University, E-mini University, and others. Anyway, I'm the first and original university site. Anyway, keep an eye on those two support triggers for our minis. Again, 1676 and a quarter right there. And again, down at 1668.25 for support trigger number 2. And those are for intraday scalping, up to 15, 20-minute round trips and so forth. Okay, now let's change gears to our currency trading. And what I like lately is I've seen weakness in the US dollar, so trading against it is likely a smart idea on continuation runs. You can see the euro dollar is the best of the charts here. The cable's also pretty good, the pound US dollar. I don't like this bearish upper shadow here. This is a classic shooting star, right? Shooting star to high. And sure enough, it backed off of there. So we want to wait till at least 20 pips above the high on the cable. The euro dollar, a bit stronger, right? We don't have any major bearish upper shadows. So if we're able to get 20 to 30 pips above that 133 level, keep that on the radar for the week ahead for our Forex. The third one, again, playing on weakness in the US dollar, is to look at our dollar yen, which obviously the inverse chart. It's the dollar against the yen. So the US dollar is weak. We lost the 100 level back on Thursday, right? So with that loss of the 100, it's been chopping around near the 100. If you pull it up on the daily, you can see what I'm talking about. The 100 is kind of the key line in the sand for the US dollar to the Japanese yen, right? You have resistance, resistance. Hey, it broke out. Not so much. Then came back down. Now it's chopping around. This is a downtrend, right? It's the downtrend continuation play. So we want to see if our dollar yen continues to plummet down here. Again, you don't want to sell it right above 94. That would be erroneous because you'd likely get support there and it'd bounce. You want to be a little bit ahead of the game there. Actually, I like to be quite a bit ahead of the game. One of the things you're going to look therefore in the dollar yen is potential entries, say 30 pips under the 97.8. Okay, so put that trigger there. See if that's able to move down. Earliest bounce play. Again, I always like to use. See how the shadow, if you can see the shadow there, provided resistance for this congestion region. We don't want to mess around with it in there. And in fact, let's see, where would I buy this? I'd be a skeptic. I wouldn't buy until we get over 98.80. I think this is going to be a chop region. It's going to be tough to figure out a long entry there that's going to work. So may move up and pull back and move up and pull. So anyway, if it bounces over the 98.80, that'd be the earliest long. And again, that's also supported by right there as being previous support, likely new resistance. So when you get in, like I say, 20, 30 pips above the 98.80 or sell it under the 97.8. So that is the dollar, US dollar plays for the week ahead as well for our Forex traders. And we got lots of good swing trades out there, so I want you guys to be on the right side of these things. Next, let me cover a quick trading strategy because I know a lot of you have been asking me for these throughout this year of Saturday events, which are now up to, now still 2211. Okay, so I didn't send out an email this morning, so I don't expect a lot of new folks in today. Trading after wide range days, and this is particularly effective or potentially effective because what it does is capitalize on institutional buying or selling pressure. So what I want you to look for is, this strategy is one in which you look for price action. It's one in which traders are looking for price action at least one average true range or one average trading range, meaning something that's bigger than it normally trades, okay? At least 20 to 30% to be specific. You want to avoid the reaction the day right after a wide range move because frequently you get a pullback or a congestion right after a big move day. So that's usually a resting day. You get an expansion day and then a contraction day. What you're going to do is trade the day after that. So it's 2 days after the wide range day. So you set entries for follow-up trade starting 2 days after the greater than one ATR trading day. And if you take a look at some of the charts out there, easiest way to spot this, by the way, is on a daily candlestick chart, because those are the charts in which you have this type of pattern. For example, well, here's one, just random charts picking here. You can see AEGR, we had a wide range day. See how the whole real body of the candle is at least 30% bigger than the average of the previous several days? We avoid the day after because that's usually a flat day, and set an entry trigger roughly 35 to 50 cents above the high of that day. That usually gets you in on a good continuation run. So everybody see that? You're looking for a wide range candle day. So for example, we don't have that right now, so not real excited about this right now. This one though, see, wide range candle followed by an expansion day, contraction day, 35 to 50 cents above the high of the second day is the long trigger, with the stop roughly 50 cents under that trigger. So you're keeping relatively tight stop on your swing trade, less than a point total. Okay. You can see this pattern time and time again. Well, here's Symantec, right? SYMC. Another good example. Wide range day, you avoid the day after, and instead you set your long trigger 35 to 50 cents above the secondary day following the wide range candle. Again, I'm a professional pattern day trader and swing trader is what I do. So I'm always a fan, a former corporate statistician and quality engineer. So I'm a professional data guy. I know how to trade off my charts. Anyway, so those are the type of variance patterns you're looking for. Is a wide range after narrows. Avoid the day after because that's usually a reactionary. They're not sure what to do after that big wide day that the institutional guys ran it up in. So you avoid that day and instead get in on the day or whatever day after that candle day takes out a 35 to 50 cent high price action trigger. Okay, very good, valuable strategy, right? Here's that. Well, another good example. I want to give you some tougher ones too, some advanced ones. Here's INFY, the ticker. This has been a really good momentum runner lately. And in fact, you might want to add that. Let me go ahead. I will add that to the week ahead list. Normally I just do 5 charts, but that's a good one to add to the week ahead as well. INFY. Anyway, now that I see that. Anyway, here's a wide range candle day. You avoid the reactionary day, and instead what you do is just draw a horizontal line and get in 35 to 50 cents above that whenever that occurs. It might be the next day, it may be several days after. So everyone see that pattern? And by the way, is that useful for me to add this kind of training for you guys? I want to give you an arrow in your quiver of good professional trading skills that you can actually use to demonstrate, you know, and to teach you and all the rest of it, you know, to go light years beyond what competitors do who are trying to sell multi-$1,000 BS and software programs and all that crap. I want to give you guys something that you can actually take and use next week without needing to do anything with me other than just learning from me. You know, that's why I've got 2,200 people registered, is I teach you guys how to actually trade, you know, and quite a few of you end up going on to become customers because you say, okay, the guy knows what he's talking about. You go off and you test it. Maybe you're a skeptic for a few months, and then you come back and, oh, yeah, okay, Calhoun's the best out there. I'll test this stuff. And, yeah, it actually does work. So, yeah, maybe I should get in his trading room or try some of his courses because the guy knows what he's talking about. And I'm a real trader with proof I trade. So, you know, icing on the cake. Makes it extremely hard to compete against me. So all of my competitors out there, you guys who are listening, you should become affiliates because I'm much better than my competitors are. As you guys know, if you've tested out the validity and the repeatability, consistency, how professional the training is and how well it works, you know, these are things that hopefully you can start using yourself. So wide range, avoid the day after, 35 to 50 cent trigger above the high. Very good strategy. All right. Well, we're off to the races. Let's see. The last thing I want to do today is, survey says, for my Trading the Open members, thanks guys for being members. It was neat to see over 400 people registered for last week's open house. I only do the open houses once every 3 to 4 months, and I don't have any free trial offers. I just don't have time. Otherwise, I get like 200 people trying to trial it every week, and I don't have time for onesie, twosie, that kind of stuff. So I kind of batch it once every few months. I'll do a rare open house, and you can get the complete videos of every single open house day at tradingtheopen.com / either open house if you want, or summer profits. Another, I just set up that page here. Just right click. I use Internet Download Manager. That's the best thing for downloading video files. But if you don't have that, just save link as, do these one at a time and watch them and audit my performance for yourself. compare my performance to anyone in the industry completely. I completely blow those guys. I believe I completely blow my competitors away. I specialize, and I'm a professional day trader. So anyway, download those videos and see how well all the alerts worked out. You know, and I post them in a nice big, easy to read alerts box at the right side of the monitor for you guys to follow each morning. So it's like right here, we've got E-minis, stocks, gap trades, swing trades, ETFs, and Forex. I got 3 Forex always set up each morning, Tuesday, Wednesday, Thursdays. I don't run it Monday and Friday because those are lighter volatility days. So I like to kind of hit and run the very best choice opening range breakout days, and those are going to be your midweek opens, right? The Tuesday, Wednesday, Thursday opening hour or so. Again, good professional room, and you can see how well the alerts work out. Just, you know, audit my performance for yourself. You know, don't take what I have to say at face value or anybody in the world. Test and prove. You know. So anyway, download those. I'm going to have them up just for the next week until this special offer is over. And again, I'm not going to repeat this. Last time I had a special, if you guys remember, back in April, May, the discount was what, $227 a month. Now it's up to about $250 a month. Okay, it's going to keep going up. And as an announcement, effective August 8th, I will be raising the room rate up to $495 per month. It's going to be the most expensive live room out there, and for good reason. I'm the best. Anyway, and I can get that. I've got thousands of traders and hundreds of you guys here. So anyway, but if you register now or whatever, those of you who are current members, you're grandfathered in, and I never raise the rate once you're in at a certain rate. It's a PayPal renewing subscription. So all you do is just scroll down here and left click on the add to cart button, and what that will do is take you over to PayPal. And again, you don't have to use a PayPal account. You can click here, and it's $495 recurring for every 2 months. You get over 24 hours of training with me for $495. That's a bargain compared to live seminar where it might be $1,500 for 16 hours of training. Here you're getting over 24 hours at home for just the two months for just $495. So that's a good price. You can just click on credit or debit card, and then you just go ahead and enter your credit card number like you normally would. Now, I like PayPal. I trust them. In fact, I only buy online using PayPal because I know that, you know, I can trust PayPal. It's what all of us on eBay use is PayPal, right? So anyway, if you're not yet a member, go ahead and join, and you can cancel yourself. You try for a couple of months, and if you decide it's not for you, hey, no harm, no foul. You can just cancel, and you won't be billed for the following 2 months and thereafter. If you want to stay with me, most of my traders do stay with me. Vast majority of my traders, got dozens of traders as members that will stay with me. It just auto renews it every couple of months for you using your PayPal. So really easy to use, and I urge you to register. Now, you have my word on this. Very good value. I mean, you're getting, you know, 24 hours of live market training with the industry's top pro on how to day trade for just $495. If you learn how to make just a couple, 3 good trades, you've more than made up your money, and then you get, you know, as a total of 2 months for that. So anyway, that's a good price. You have my word on it. I'm, you know, click on links here to see, and, you know, I've been around since the early days. I'm one of the old timers. I'm one of the original .com day traders, unlike my competitors who try and copy my approach, compare my performance with anyone. Anyway, that's it. Now let's take a look at our 5 charts for our live room members. I purposefully obscure the tickers so that only live room members get to see those. Let me see. Here is chart number 1. So the identity of these charts, the tickers that I'm showing you, it's kind of a clever approach. It's designed to help you say, hey, maybe I actually should join his live room because these are great charts. And we follow up on these. These are good swing trading picks, which I also add to, you know, in each Tuesday, Wednesday, Thursday session with additional swing trades. And I record the first half hour of each session for you and put it in the download area. So even if you're, say, a swing trader and you can't make it live each morning, it's still definitely worth getting because you can get the downloadable video each night, you know, kind of thing, and look at your swing trades from there. So really good opportunity to learn with me. You have my word. It's a very good value. Anyway, that's chart number 1. Chart number 2 is this one. Okay, really good gap momentum runaway play here. You can see it ran from 38 up to 40, or just under 41. Then a big window or gap up, shooting star, sold down. Now it takes out new highs. This is chart number 2 for the week ahead. Chart number 3 is this one. Another gap momentum run. Remember, gaps continue most of the time. Ignore those educators who are morons who don't even really prove they trade, because most of them don't, who say fade the gap. If it gaps up, sell it. No, that ends badly, Sparky. Make sure you buy the gaps up most of the time and sell gaps down, because that's institutional order flow. The market on open orders are cleared to exchanges, and that dries up supply, and so then it keeps running up. Ask any professional trader. Don't ask educators. Ask real traders like myself. Anyway, that is chart number 3. Chart number 4 is this one. Chart number 4, a little choppier, but I like the fact we had, a gap up continuation. Yeah, as always, gap up continuation. Anyway, ran up from 49 up to 53. So a good 4-point runner. I like the steady trend of this. I like the fact, even though it's not a wide range superstar chart, it's a nice steady grind up. So this is chart number 4. And last but not least, we've got chart number 5. This one, what I really like about this is the price action breakout yesterday. We had a really good move from just under 50 up to over 51 with good high volume and a good breakout that took it to new 15-day highs. So the identity of this one, these are what I call my cash charts. These are the very best of the week ahead things, are of course only for my paid members. And the identity of those 5 charts is the trading industry's most closely guarded secret. We've got armed guards, right? No, just kidding. But anyway, it's in the members area, so just a little levity there in front of all you hundreds of traders. It's great to see you guys here. Anyway, 2,200 registered today. That's chart number 5. You guys have been great. Let me know if any questions. I got to go get ready for the members only webinar. That's our S&P for recent price action. A couple of bullish lower shadows, but we do have some weakness here, and 2 sequential red days is my signal to get out of the market. So I am not going to be aggressively buying unless we break 1705. Anyway, thanks everybody for being here. I will see you next week, next time, Trading Week Ahead. Now I'll open it up for Q&A for just a few minutes, then I've got the scan